Hey traders, it's John Fortune here with this week's weekly Forex forecast. I hope everybody's having a fantastic weekend. Last week the data changed and we have to be paying attention to this. This bounce, this near-term bottom that we've been seeing in the dollar is not, by the looks of it, a recessionary trade just yet. It looks like the threat is of a reacceleration of inflation, and going into next week, those setups are looking the best in terms of generating returns next week in Forex. Okay, so if we have a quick look at the economic calendar, I have been tweeting previously that the data is showing that there is a threat of a reacceleration in inflation, not just in the US, but globally. And last week we had some very significant data out because Canada did start to show beats once again in inflation, higher than expected. And this is the coincident data confirming what I've been discussing before on Twitter, that we could actually see a reacceleration of inflation before we see a recession. And in fact, central banks could be forced to do more, and that's what induces a recession perhaps later on in the year. Now, it wasn't just Canada which saw a reacceleration of inflation last week. If we scroll down here, you can see on Friday, also very, very important, we had Japan inflation coming out much hotter than expected, and also, as you can see, reaccelerating from previous levels. Now, this is significant, and going into this week, I do favor yen shorts as the best Forex play heading into next week because they've got increasing inflation, and at the same time, the Bank of Japan are refusing to do anything on the yield curve control. However, just note, with this beat in inflation, it does increase the risk now of the Bank of Japan actually taking action on their yield curve control program. So if you are shorting yen, just bear in mind there is that risk that the BOJ comes out maybe into meeting and discusses the yield curve control program. However, I do favor Japanese yen shorts just for short-term trades next week. And the final piece of data we need to pay attention to, which is coming up this week, is the interest rate decision out of New Zealand. We'd also have some GDP data and some other data coming out, but it's the interest rate decision on Wednesday out of New Zealand that we need to pay attention to for short-term trades. Why? Because the New Zealand dollar pairs are unlikely to do anything between Monday and Wednesday. And from Wednesday onwards, they're likely to start to find volatility and start to move. So I am interested in New Zealand dollar pairs, but for those trending markets after Wednesday. Okay, so let's have a quick look at the scores for the coming week. And what's interesting about the scores is, first and foremost, you can see that they are sort of contracting, consolidating, but they are speaking to us in terms of this potential regime shift we're seeing into that reacceleration of inflation phase of the business cycle. And we can see that through a number of things. First of all, we can see the commodity currencies, the New Zealand dollar, the Aussie dollar, and the Canadian dollar all bouncing or troughing in the scorecards. But at the same time, we're seeing the US dollar bottoming in the scorecards, because if you remember, this was at one point -2, then it went to -1 and then 0. So the direction of travel for the US dollar is here. And that's one of the reasons why I like US dollar longs going into next week. But what's interesting is it's the pound and the euro and the Swiss franc, these currencies that tend to benefit from a disinflationary environment, which is what we've been in. So we've seen the dollar underperforming as we've had disinflation. We've seen commodity currencies underperforming as we've had disinflation. We've seen the G7 majors, the pound, the euro, the franc, outperforming as we've had disinflation. And now we're seeing a reversal of that. We're seeing the opposite. So the scorecards are telling us, as a forwards-looking indicator 1 to 4 weeks out, we should be looking to position into those setups, at least on current data, that benefit from a reacceleration of inflation. It's telling us the disinflation trade may be coming to an end, or at least it looks like it's coming to an end, and it is being replaced by this reflationary or increase in inflation trade. So very, very important data coming out, and as a result, I do like the Japanese yen as the best market next week to be short. You can see we are weak and getting weaker. And alongside that, I prefer next week to look for some of these commodity currencies like the New Zealand dollar versus the yen is something we're going to look at, but bear in mind you've got the interest rate decision. We're also going to look at franc yen because the franc is still the highest in the scorecards, even though it's actually weakening. It got that, again, that reversal, the unwinding of the disinflation trade that we've been seeing. And at the same time, the Canadian dollar, which has moved into the positive side of the scorecards. Yes, it's only one, but the direction of travel is to the positive side. So CAD yen is something we're going to be looking at. And I also, once again, like the US dollar versus the yen. So we're going to be looking at yen pairs primarily as the best setups heading into next week. But there's also some other markets we can look at as well. And that's the G7 or the G10 currencies, the majors, versus some of these commodity currencies. So we can look at, for example, pound CAD to the downside next week. You can look at EurCad to the downside. And we can also look at pound and euro versus the dollar, for example, as again, we start to see that reacceleration of inflation trade where the G10 majors underperform and the dollar actually starts to outperform alongside the commodity currencies. So that's what we're looking at, and that's the plan heading into next week. Okay, so let's have a look at the individual currencies before moving on to the markets themselves, starting with the dollar index. I have been highlighting this as a bottoming process in the dollar for a number of weeks, in fact, for a number of months really. And last week I highlighted for the first time we have that reversal, we have that inverse head and shoulders break, and we should look for this to continue with momentum. And we are now back above the 2-year breakout, and it does look like we're going to make a run at the 7-year breakout, and I would imagine break through here. So once again, you know, you look at this and is this a recessionary trade? Well, if that's the case, we should really be seeing the commodity currencies tanking, but they're not, they're benefiting. And this is exactly what you expect to see, not in a recessionary trade or environment, which again, for those of you who have been following for a while, do know that I have a high conviction in a recession near term, but this is a question of timing. We're talking about right now. And right now, the environment is more about trading a potential reacceleration of inflation, and then perhaps later on in the year, maybe Q4, maybe even Q1 next year, who knows, but I have a feeling it could be Q4 this year. Then we could start to see the regime shift into a more recessionary environment. So going into next week, I do favor the dollar to the long side once again, but I also like those commodity currencies, and especially versus shorting, so long dollar, long commodity currencies versus the G10 majors, for example. Those are the setups that I like the best next week. Next is the euro. Now, I was saying to you in this area, I do think we're going to fail here and break down. We could have come up and tested the 1.12155. I mean, these are processes, these reversals, they're not exact price points. As you can see, they can test, they can chop, and who knows, we could have tested this first before failing, but we started to fail and break down before actually testing any higher. Now we've got nice momentum to the downside. We also have, as this is a high and this is a lower high, and this is a lower high, we also have that head and shoulders reversal now. So any pullback in this market next week, I am looking for euro shorts, and not just versus the dollar, but again, we're going to be looking at that versus the CAD and some of these commodity currencies as well. Next is the Swiss franc. Now, the Swiss franc is one of the better currencies this year, and I have been looking to be long the Swiss franc, and I stated right at the beginning of the year, I do think the Swiss franc could be coming up to the 117 area, which I still believe. However, we've started to see this sell off. And when did this peak? If you remember, we were right here in the scorecards. The scorecards peaked, I believe, from 4 to 3 for the first time. And we had one more test of the highs, and that was the top. And that was the scorecards telling us 1 to 4 weeks out, we should be looking at booking profits on Swiss franc long trades. And we've actually just been correcting ever since. I do view this as a near-term correction, and on balance, I still quite like the Swiss franc versus the yen going into next week. But because it is currently not benefiting from this potential threat of a reacceleration of inflation, you know, we're seeing those G10 kind of majors selling off, I don't like it anymore because, as I said, the data changed last week. During the week, the data changed, so we need to pay attention to it this week. And that's what happens. Data does change. We're not always going to be looking at the same markets. The Swiss franc long has been a very good trade. Now it's not looking like one of the better trades. As of yet, I think it will come back this year. Next is the yen. Now, the yen has broken down a very significant key area of support because this is a failure to make a high over here. So we're starting to trend down. And I do think the Japanese yen actually could come back down to this low. The only fly in the ointment here, and you can see the momentum to the downside, so I do like this for further declines next week. And the fundamentals are there for further yen weakness as well, because if you're getting inflation but the BOJ are not going to do anything about it, at least near term, that is bearish for the currency. However, just bear in mind, I would make sure you're using wide stops if you're shorting the yen. I wouldn't be taking massive size with tiny positions, because what will happen is if the Bank of Japan do come out and they even just, speak a little bit hawkish, maybe into meeting, about adjusting yield curve control, you could see a spike to the upside in the yen. So I like yen for shorts. We're always speculating and taking some risk, but just beware, I would do that with a wider stop. Next is the CAD. Now the CAD is just really, overall, the CAD is absolutely neutral. However, the scorecards, with that change and that jump by +2 in the scorecards, although technically the CAD is neutral, it is suggesting that this could now be on the cards once again. And we've kind of been chopping around and been umming and ahhing whether we're going to come back and test this. Based on what we're seeing in the scorecards, it's telling us that this kind of consolidation, which is almost this kind of pennant, this is more likely to break out to the upside and possibly come back and test this. So if that's the case, I do like the Canadian dollar versus certainly the yen next week. I like the CAD versus the pound and even the euro. So again, that commodity currency versus the G10 major trade. Next is Aussie dollar. Now the Australian dollar, when you look at this, it did actually bottom in the scorecard somewhat, but this is extremely bearish technically, and we could actually have quite a strong sell-off if we break here. So I'm not really going out and looking to be long the Australian dollar, because it is still quite weak in the scorecards and it's not benefiting as much as the New Zealand dollar has, or even the Canadian dollar. So I prefer to be long the Canadian dollar and the New Zealand dollar next week against those G10 majors. But maybe we do get a little bit of a bounce in Aussie as well. So generally speaking, Aussie is off the list next week because it's kind of too weak or too bearish to get long. But at the same time, I don't want to short it if we are going to see the commodity currencies benefiting near term. And finally, we have the New Zealand dollar. Now, you guys know my view that we are coming down to here at some point this year. However, we've just been chopping sideways pretty much since February. And with the interest rate decision, maybe we could come up and test the high once again before rolling over, or we might just break down straight away from the interest rate decision. So the best course of action is really to be able to play this both ways. So be reactive as opposed to trying to predict what's going to happen next week. And that's how I'd be looking to play the New Zealand dollar next week. So before the interest rate decision on Wednesday, I imagine this is going to do nothing. And then if we break higher and we get New Zealand dollar strength, it is going to be New Zealand yen to the upside that I'm interested in, Aussie New Zealand to the downside. But if that fails to materialize and instead we get New Zealand dollar weakness, so this turns into a big bear flag, and we break lower on Wednesday, and then we start to correct, Thursday, Friday, and into next week, I would be looking for this run down to the low, and New Zealand dollar to the downside would be my preferred pair to reflect that New Zealand dollar weakness if we get it on Wednesday. Okay, so let's have a look at the markets themselves, starting with crude oil. And last week, we were looking at the market pulling back, and I said to you, I'm looking for breakouts in crude oil to the downside into this key area down here. However, if we fail to break out and we just continue to correct into this area up here, this would be the opportunity for a kind of sell-off. So you could actually sell it on the break down to here, or if it pulls all the way back in, you can actually sell it from this area. And you can see there was a really nice sell-off at the end of last week. There was a trade in there for anybody selling that from that area. Going into this week, on balance, I do favor crude oil shorts once again, and exactly the same process applies here. If we continue to pull back, I am going to be looking for potential breakout in crude oil to the downside. However, if we come all the way back up to the upper bound over here, this is also somewhere you could start to look for a potential short-term short opportunity in crude oil. So I do have a bearish bias. However, I'm giving you both of these areas here in crude oil heading into next week because we're just ranging and consolidating. Next is New Zealand yen. Now, last week this traded into the max profit taking zone. It actually traded through and started to pull back. So this was a nice market to the upside last week. Heading into this week, I am looking for this market to consolidate into Wednesday, and then from Wednesday onwards, it's in blue because we have that interest rate decision on Wednesday. Looking for a breakout to the upside, and then I'm going to be looking for any follow through over the next week or two into the 88 area. Next is CAD yen, and look at where we sold off from in CAD yen last week. We traded right into the max profit taking area, and then boom, we saw that big sell off to the downside. So a really nice move to the upside in CAD yen last week. Coming into this week, I'm only interested in being long this market, so any pullback is an opportunity to look for bullish setups into the 104 area. Next is franc yen. Now franc yen traded into its max profit taking area, and you can see that was pretty much the entire move there. Once we traded into this from last week and we started down in this area, we traded into this area, and that was where you wanted to be booking profits on any short-term longs in this market last week. Coming into this week, I do still like franc yen to the upside, but because we're looking at that kind of G10 major, although I say G10 major, the Japanese yen and also the Canadian dollar, these are part of the G10, as is the US dollar. So a more accurate way of describing it, I suppose, would actually be the EU majors. So euro, pound, and also the Swiss franc, plus the Japanese yen. You know, those four currencies there underperforming in a kind of inflationary environment, whilst the commodity currencies and the US dollar, and of course, again, the US dollar in the G10, you know, they outperform. So G10 majors is probably not a very accurate way of describing this. It's more the EU G10 majors plus the Japanese yen that I'm looking to underperform. So bear in mind, the Swiss franc is an EU major there. It is kind of, you know, two currencies which are likely to underperform, but the yen is likely to underperform more. That's kind of why this is not in gold, first and foremost, because it's not one of the best setups in my opinion, but it is a setup and it is something you can look at. So any pullback in this market, I am looking for further advances to the upside. I'm going to be looking up to the 155.50 area. Next is US dollar yen. Now this was another market highlighted, and it traded right into its max profit taking zone, pushed through it and started to pull back. So going into this week, I would like to see this pull back because it's been a very strong trend. So any consolidation or correction in this market is simply viewed as an opportunity once again to look for longs into the 140 area. Okay, so moving on to the dollar pairs, and this is the dollar versus those EU majors. I did highlight euro dollar to the downside, and we just ticked by essentially a pipette that max profit taking area last week in the euro. So coming into this week, any pullback, and we did have a nice move down, so a bit of patience may be required next week as we see a correction or consolidation. This is simply viewed as a second opportunity to look for shorts down towards 1.0700. Next is pound dollar. Any pullback, and we've already started to pull back, you can see this is just trending to the downside. So any pullback and correction would be great. The more we move away from the target, the more reward we have to the target here, or the max profit taking zone. So any breakdown or reversal in this market is viewed as an opportunity to look for shorts next week into the 1.2320 area. Okay, so those are my favorite markets next week: CAD yen, US dollar yen, euro dollar, and pound dollar in the Forex complex. Those are my four favorite pairs. We're now going to look at the euro majors here versus the Canadian dollar. So starting with pound CAD, we've already started to pull back. Any continued consolidation in this market is viewed as an opportunity to look for reversals down to the 1.6650 area. Next is EurCad. Any pullback in this market, again, look for the correction, look for the corrective pattern like this. This is a correction, and then we break out to the downside. Any correction, I am looking at a reversal to the downside next week into the 1.4450 area. And the final Forex pairs we're going to look at here are New Zealand interest rate decision plays. So Aussie New Zealand to the downside, which is New Zealand dollar strength. And then that reversal opportunity, if we get a weakness or a sell-off in the New Zealand dollar for whatever reason on Wednesday, we'll look to pivot to that New Zealand dollar shorts. So starting with Aussie dollar, any pullback in this market into Wednesday, because this market's unlikely to do much into Wednesday, look for the breakdown or reversal on Wednesday like this, and that is the opportunity to look for a follow-through trade to the downside to the 1.0500 area. Now again, I'm only interested in shorting Aussie New Zealand, and I'm only interested in being long New Zealand yen if we get strength from the New Zealand interest rate decision. If we get weakness in the New Zealand dollar from the interest rate decision, I'm going to be looking at New Zealand dollar to the downside only. So the final Forex pair is New Zealand dollar before moving on to the metals here. Any continued consolidation in this market next week is simply viewed as an opportunity to look for a potential bearish reversal on the interest rate decision. So instead of getting the strength, we get the weakness. And then I'm going to be looking potentially for any follow-through trade to the downside into the previous low here at 0.6180. Okay, so wrapping up the video with gold, silver, and Bitcoin, and I do like shorts in gold and silver particularly, maybe Bitcoin, although the problem is if we have a kind of re-acceleration inflation, we can see the dollar and stocks rallying together, and if stocks rally, we could actually see Bitcoin. In fact, we've already seen Bitcoin kind of holding up. So I prefer gold and silver shorts as opposed to Bitcoin shorts, but with a stronger dollar or a stronger bias on the dollar, all of these are on balance a short. And in terms of gold versus silver, you can see we did have a big outperformance, but now we're correcting. So going into next week, if this is going to pull back, maybe we retest over here. I do like gold shorts next week over silver shorts, but I like both of them. Okay, so starting with gold, you can see we did pull back into the max profit taking zone. This is what I highlighted last week for potential shorts in gold. And I have been also highlighting the fact that I believe gold is topping out as we see that bottom in the dollar. Going into this week, any pullback in gold for a day or two is simply viewed as an opportunity to look for shorts down to, there's a previous low over here at the 1930 area roughly. That would be my max profit taking zone in gold on a short-term basis. Next is silver. I did highlight the major double top reversal in silver with momentum. And going into this week, I do really like shorts. Perhaps we pull back and retest the underside of this. That would not be surprising to me. But I am only looking for shorts in silver down to the 22.75 area. And last but not least, we have Bitcoin. Now, Bitcoin was highlighted last week. We had this same zone roughly at the 25,200. However, you can see as stocks have actually done pretty well with that kind of re-acceleration of inflation trade, where we're seeing stocks actually going up at the same time as the dollar rallying, and we're seeing bonds, TLT, selling off. Bitcoin has actually not really gone anywhere, and that's because you've got the dollar strengthening, but at the same time, you've got stocks going up. So I don't have a strong bias on Bitcoin as it currently stands. On balance, I'd rather be looking for shorts into the 25,200 area. So that is it for me for this week, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the room each day where I go through these markets and the setups that I'm personally looking at with members on a daily basis for over 75 markets in different asset classes, including stocks, bonds, Forex, and commodities. So if you'd like to know more about the benefits of GMT membership, why not check out the link in the description below and in the pinned comment where you can get a 2-week free trial totally risk-free. So have a fantastic weekend. I'll see you all next week.